So the entire economy and the stock market has been crazy recently. In September, the Fed's chair, Jerome Powell, said the fight against inflation might cause a recession. The Fed's goal of engineering a soft landing seems increasingly unlikely. Although now is a scary time to invest, my approach for my long-term portfolio is to cost average down and continue to buy good stocks and hold it for long-term, because you never let a good crisis go to waste. So in this video, I'm going through 2 top stocks to consider in November 2022. I will go over important news, numbers, and why they are solid long-term investments. For a new subscriber who do not know me yet, my name is Cody Ye. I'm a coach and 7-figure investor in stock option and real estate. I was featured on TD Direct Investing and 70+ investor-focused podcasts last year alone. Now let's get started. So the first stock I'm talking about today is Apple with the ticker AAPL. Apple is an American multinational technology company that's specializing in electronics, software, and online services. Right now, one share of Apple stock is trading at $138.38. If you look at the 1-year chart, you can see that Apple has a huge swing in price. We had new highs in January, March, and August in 2022. And now the stock has pulled back below the 1-year low level of $143. Apple has a market capital of $2.3 trillion, a PE ratio of 22.67, an earning per share of 6.1. From the profitability standpoint, Apple's net income margin is at 25.71%, and the return on equity is at a whopping 162.82%, where the sector median is only 6.45%. From the income statement report, we can see that Apple has a trailing 12 months revenue of $387 billion. In 2021, Apple has a 33.26% year-over-year growth on revenue. The 5-year average revenue growth is at 11.98%. Apple also has a trailing 12 months net income of $99 billion. Apple has about $27 billion cash and equivalents for expansion or weather any economic downturn. If we compare Apple to S&P 500, which is the benchmark index for the best 500 companies in the United States, we can see that Apple has been performing better than the S&P 500. Apple stock has gone up more during the up market and been more resilient during the down market. While S&P 500 has dropped 20% over the past year, Apple is still at 0% year-over-year change. According to the Wall Street analyst rating, 1 being a strong sell and 5 being a strong buy, Apple is being rated at 4.36, which is very close to a strong buy. I do not trust analysts' rating completely, but it does reflect on the opinions from the big institutions. According to Apple's investors website, the company's stock has been split 5 times. Since the 2014 stock split, the shares has gained 642% as Apple's business has performed positively during this period. Meanwhile, after 2020's Apple's 4-for-1 stock split, the price of shares has increased by 47.3%. Even though these gains cannot be directly linked to the split, investors might perceive the stock as more affordable and buy the stocks. This effectively boosts the demand for the stocks and drive up the prices. Apple now has 860 million paid subscriptions across services, which is an increase of 160 million over just the last 12 months. The subscription-based model is very profitable for businesses. This model ensures that Apple has the recurring revenue to sustain the company's growth. It's also worth mentioning that Warren Buffett's holding company Berkshire Hathaway has a valuation of $312 billion, and their number 1 holding is Apple, which is 40.5% of the entire portfolio. All in all, with a strong history of revenue growth, reasonable ratios, the growing subscriptions, and also being more resilient than the market benchmark index in the past year, Apple seems very appealing to buy and hold for the long term. The second stock I'm talking about today is Tesla with the ticker TSLA. Tesla is an American multinational automotive and clean energy company. Right now, one share of Tesla stock is trading at $204.99. If you look at the 1-year price chart, you can also see that Tesla has a huge price swing over the last year. Tesla has new highs in November 2021 and January and April 2022. And now the stock has pulled back below the 1-year low level of $274. Tesla has a market capital of $694 billion, a PE ratio of 48.1, an earning per share of 4.26. From the profitability standpoint, Tesla has the net income margin of 14.17%, and the return on common equity is at 31.12%, where the sector median is only at 14.93%. From the income statement report, we see that Tesla has a trailing 12-month revenue of $67.1 billion. In 2021, Tesla has a 70.67% year-over-year growth on revenue. The 5-year average revenue growth is at 20.09%. Tesla has a trailing 12-month net income of $9.5 billion. Tesla has about $18.3 billion cash and equivalents for expansion or weather economic downturns. If we compare Tesla to S&P 500, we can see that Tesla has been performing neck to neck with the S&P 500. Tesla stock has been going up more during the up market and pull back slightly more during the bearish period. While S&P 500 stocks has dropped 20% over the past year, Tesla's stock dropped 23%. According to the Wall Street analyst rating, Tesla has a rating of 3.86, which is very close to a buy. The famous hedge fund manager Cathie Wood has purchased another $32 million in Tesla shares, while the company lost $70 billion in value last month. Tesla stock has been split twice in history. A 5-for-1 stock split in August 2020 and a 3-for-1 stock split in August 2022, with a stock price approaching $1,000 per share before both splits. Tesla has had a hefty price tag for most retail investors. The stock is currently held by a wide range of different funds. Vanguard owns more than 62 million shares, and BlackRock owns more than 52 million shares. More than 3,000 institutions own shares in Tesla. The two stock splits can ensure that more retail investors can own a piece of Tesla. During the AI Day in September 2022, Tesla introduced the Optimus robot, coming out for a stroll and waving to the audience, and also picking up a box and navigating through a busy office full of people and furniture. Tesla also said that the full self-driving beta went from 2,000 customers in 2021 up to 160,000 customers in 2022. Elon Musk once again confirmed that the beta for full self-driving mode will be available by the end of the year. All things considered, Tesla has historically been a very high PE ratio stock, where investors consider the stock valuable but overpriced. With the most recent pullback of the stock price, the PE ratio has approached 48.1, whereas at one point it was over 1,000. Tesla continued their promises to investors and followers with groundbreaking innovations. What's more important is that Elon Musk has time and time again delivered his promises to all the investors since the inception of Tesla. So if you're someone who believes in the long-term prosperity of this company, now could be a good time to buy some stocks and hold for the long term. Anyways, those are my top picks for the month of November 2022. The US midterm election is coming up on November the 8th. Based on the statistics, stocks tend to pull back substantially before the midterm election and go up 14% over the last year. If you're not yet part of my free stock option investing Facebook group with more than 4,000 like-minded investors just like yourself, click the link in the description, and I run a Facebook Live every Thursday just for our members. Before you invest in anything, make sure you do your own due diligence. This video should only be used as a reference and you should be comfortable with your own investment and not ask anyone on the internet when you should buy or when you should sell. If you're new to this channel, I make tons of videos about personal finance, stocks, option, and real estate investing. And also let me know what is your top pick for November 2022. Leave it in the comment section below. So hit that like button and subscribe if you want to join me on the journey to reach financial freedom sooner. Say yeah.